This segment sponsored by Foster Financial. It's time for Money Monday with Foster Financial, which is a great day to really learn more about your finances and investment options and different things in the finance industry. And joining me today is Caleb Doan, who is the Vice President of Foster Financial. Hey there, Caleb.
Hey.
Okay, so we've talked before about misconceptions that people may have in finance. And I think it's very interesting because it kind of lets people think and kind of like get a question answer that they may have been thinking about.
Yeah.
And so let's talk about business deductions today. So what would you say would be the biggest misconception that someone has in that area?
Yeah, we see, this is probably one of the biggest misconceptions that we see, maybe outside of the tax brackets, which we had talked about at one point. But with business deductions specifically, with self-employed people, and especially recently self-employed people, they think, hey, if it's a business expense and I get to deduct it on my taxes, then it's free. You know, I don't have to worry about the expense. Maybe I'm spending a little bit of money here, but it's a deduction. We don't have to worry about it. It's okay if I'm a little looser with my money when it comes to the business side of things. And that's definitely a big misconception that we'd like to kind of nip in the bud early when somebody is self-employed.
Yeah, because it is funny because because I've done like self-employment taxes before for myself, and when you get to that little category, it really isn't a big chunk that comes out that you get to deduct compared to what you paid for it. So this is so good, but you wouldn't know that before you actually did it or had someone do your taxes, right? And so what do you think is a good way for people to really gauge how to best manage their purchases if this actually is implied this way? Yeah.
I mean, a good way to think about it is that if you're in, let's say, the 22% tax bracket, federal income tax bracket, you have to spend $1,000 on some business expense. You're buying a new piece of technology or whatever it might be. You're only getting to deduct, you get to deduct $1,000 off your taxes or off your taxable income, but it's only reducing your taxes by $220, right? Because 22% of $1,000, $220, you're still out the other $780 that you spent on that thing. And so if it was a necessary purchase, then great. You still get that $220 reduction in the taxes that you owe, which is great to have, but at the same time, you still spent money, your cash flow, still net is negative because of that. So, a common saying that people might hear is, don't spend $1 to save 20 cents, right? You're still losing on that transaction there. So for normal, necessary business expenses, obviously keep doing those things, and it's necessary for the business. But it doesn't give you a license just to be kind of frivolous with business expenses just because you get a deduction on that.
Yes, and I have actually witnessed this. People will be like, let's say you go out to eat or something. It's like, oh, it's fine. It's a business deduction. They're like paying for stuff. Oh, it's fine. And I'm like, I don't know if it's fine.
Right.
You know, it's like you're still paying for this out of your business.
Yeah.
And so what do you think would be one of those unnecessary purchases?
Yeah, a big one that we see is like luxury vehicles for businesses, and that's a very big ticket item too. So you're spending a lot on that. Going out to eat and stuff, hey, you're spending a few $100s. Not a huge deal, unless you're doing it every week. But yeah, buying a really luxury vehicle for someone who's self-employed when you maybe don't need that type of a vehicle is a big thing. And there's extra deductions or kind of what they call like accelerated depreciation for vehicles specifically. So there is extra tax benefits for those for self-employed people, but still it ends up being a really big expense. Even if you get a deduction on that, it's still a big expense. You'd oftentimes be better off paying, a lower amount for a more reasonable vehicle. Even if the deduction is a little bit less, net, you're still going to end up better than what you would with a big luxury vehicle.
Yeah, you got to treat your business like you do your personal finances and not overspend.
Right.
And so do you see this misconception happening more with people who do their own taxes or people who have a CPA doing their business taxes?
Honestly, it's both. Yeah. And sometimes I think CPAs will try to get the point across too a little bit with their folks, so maybe it's a little less common there. But a lot of times when people are self-employed, they are using a CPA because it can just get difficult to do a lot of these different tax filings that they have. But yeah, it's a good idea to apply those same, due diligence and everything like that you do in your personal life to some of those business expenses, and understand just because it's a deduction, doesn't mean it's coming out completely free. A lot of times I'll tell people, think about, that you're getting a little bit of a discount on it. About the same as what your tax rate is. So, hey, if I'm in the 22%, I'm getting about a 22%, sale or kind of discount on this thing, but we're still spending money. And so still kind of judge everything with the necessary precaution when you have those business expenses.
Yeah, and also, what do you feel about the charitable side of business giving when it comes to the deduction? Does it come out the same way as a personal contribution to philanthropy?
It actually depends on like how the business is organized. So whether it's like a corporation and things like that, a lot of times with folks who are just self-employed, it's not going to come out of the business.
Yeah.
So you can't take like the standard deduction on your personal taxes if you're just self-employed, sole proprietor, and then also deduct charitable expenses from the business there too. So that is another common one that we'll see with people.
Yeah.
Obviously, the IRS has looked into all this stuff, so they're always trying to take out these loopholes.
Yeah.
Usually they've thought about it, and so you want to make sure you're in compliance with all of these things.
Yeah, that's really good. So the biggest takeaway is be mindful with your spending regardless.
Yeah, absolutely.
Okay, thank you, Caleb.
Yeah, thank you.
And if you would like more information about Foster Financial, we'll have their website and their phone number listed below. Reach out to them, and I'll see you after the break. This segment sponsored by Foster Financial.